Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, January the 24th, 2014. So let's take a look. Let's jump into the markets here, starting out with the Dow futures. The Dow futures on the daily chart, and essentially we had a pretty decent pullback this week. Now we were expecting that pullback. Last week into this bar, and I had sort of kind of thrown in the towel and said, well, it doesn't look like the market is actually ready to pull back. We originally were looking at this zone here, which coincided with that swing point high, and essentially what happened was it looked like we were going to push off back to the high side, and then we actually failed, and we came down a lot harder than I was expecting. We came down into some lower levels around 15,000. We closed at 15,816. So let's clear off a couple things on this chart and delve into where we're at, what we were expecting, and what we might expect going forward. So initially we were looking at targets as high as 16,700. We had a lower zone of 16,400. So we got somewhere almost in the middle, not quite in the middle, but yeah, almost exactly in the middle. I think if we went about 50 points higher, 16,600 would have been the median or midpoint between 16,400 and 16,754. So essentially, I'm going to remove. Essentially this target was met. Now the question is, are we going to move much higher? So let me delete some of these older analysis techniques. This was a zone we thought we were going to reach. Let's delete this. Wanted to leave that on there just so you can see, like, this isn't really hindsight analysis. We're going to walk this forward and see what might happen going forward, some of the scenarios. So I'm going to take a scenario approach to the markets. We've had so let's just do that. We've had this trend line violated, and we have this this key zone here, which is around 15,670. Let's call it 15,700. Within 30 points. And you can see if we go back on the chart. Let me just zoom the chart out here. This was a congestion area and a wide range that we had been trading in, and we had been talking about going back in the past. These were some major weekly support levels down here, and then we had some major resistance levels, which is now a major support level. So I hope that makes sense. Essentially we had this wide range. We broke through this range. We've traded enough above it that this former resistance area, marked by this dark green line here, this thick green line, is now a major support area. So you can see that, from a support resistance perspective, this area that we broke through, we came back down, we retested it here off of this bull flag that we had talked about, and then we broke through it. Now we're coming back into right into this area, which was this former resistance area, and we're coming back into it. So, support or resistance once broken is now support. So what we really want to see here, this is a potential area. This is a potential area here where we could find some support in the market. So this is an area we're going to be looking at. So essentially, another area that we could look at is looking at, let's take a look at this, this minor high and this minor low. We've already broken the 618 of that. So if we actually look at, this major low and this major high, a 50% retracement would bring us just below this major support zone. Now, because of the way contracts roll over, I may need to actually, this line looks like it moved because it was at the peak of this before. So you can see if I move this, or if I actually parallel it, and I put a support line right at the top of this peak here, that would bring us down to 15,000, call it 15,600. So you can see a developing area here where you have, an expectation that these levels may hold. So you've got a zone here, let's call it between 15,600 and 15,700, where we could find some major support, and that overlaps with a 50% retracement of this last major move up. So when I see these areas and I see this type of confluence, I really like this area here around 15,000. Let's call it 15,600 to 15,700. So if we look at some momentum indicators and sort of overlay that on top of the price action, you can see here that our slow stochastic is starting, to get down to the oversold area here. So I'm looking for the momentum to come down into the oversold area. And I'm also looking at our MACD here. It's still above the zero line, which is positive. And this zero line might actually provide indicator support for this market. So when we look at it from that perspective, what I'm really going to be watching going forward is I'm going to be watching for a move into this zone. It's not going to be a hard level. It's going to be a zone. And then I'm going to be looking for momentum to start bottoming out, and for the MACD maybe to test its zero line. And then I'm going to be looking for signs that the market is possibly, let me just change the pen here, the market is possibly ready to start, moving, finding support and moving back up to the high side. So I haven't given up on the long side of the market yet. Yeah, I mean, this could be the time where the market just says, you know what, we're done, we're tired, and we're ready for a major correction. But this is just a normal correction to my thinking in a market that has come a long way over a long period of time. So, for it to give back some, it's not uncommon. And I think that this is, this is a scenario that the probabilities favor, considering we've been in an uptrend for a long time, and there's no evidence that we're really going to break this long-term uptrend until the evidence presents itself. We have to assume that the market is pulling back to support and moving higher. That's just the way I'm looking at it. So let me clear some of this stuff off and look at from a market structure perspective. We have this, we have a low in place, we have a higher low in place here. Even though we've broken this trend line, unless we actually break this swing point low, I mean, we could come back and retest this swing point low here and still, have the makings of, stair-stepping higher kind of market structure. So from that perspective as well, there's no reason to really give up on the long side. I think in order for me to really start to change my perspective, I'd want to see this sort of scenario happen where we do this, and then let's say we come down here and then we fail to put in a higher high, and then we break through a low that was established here. At that point, then I would start saying, this doesn't really make sense. Maybe the market is actually going to reverse itself. But at this point in time, we haven't had that scenario happen, so we still have to sort of take it on the evidence that the market still has the potential to find a footing and to go higher. So if we look at the market from this perspective, I still like the long side of the market. I'm just looking to see how far it is going to pull back. I'm not really interested in the short side of the market because I think that we're really close to support here, and I don't really see that unless I believe that we could probably get all the way down to these lows, then you've got a lot of distance to make a potential profit there. But because I'm looking at this as a potential support zone, I don't think we really have that much distance to make a profit on a swing trading basis. So I hope that makes sense. I spent quite a bit of time on that just because I think we're coming to an interesting area of the market. And, if I were long this market right now, I'd be very nervous. But what I'm really doing is I'm looking to reload some longs once the market actually presents itself. So the other things I'm going to be looking at going forward are, let me just jump over and look at another analysis screen. Let me change this to the Dow futures. Forget about all this analysis on this screen, but if we look at let me actually expand this out. If we look at the seasonality, the seasonal tendency of the Dow futures over the last 5 years, you can see that this is where we are right now. Okay, let's see. This is basically where we are right now. It's not a straight line, but you can see that, we have over the last 5 years a seasonal average tendency to sort of go sideways to lower, and then we sort of find a footing here somewhere so this is January, this is February, this is the end of February, okay, and then going into this would be March. Then you can see we start to find some footing at the end of February, maybe early March, and then we start to trek higher. So this could be a prolonged situation where, for the next month or so we remain in a choppy to sideways, because we're coming close to the end of January now. So maybe the month of February we have a choppy to sideways sort of market, and then we can look for a potential seasonal buy point in March at some point in time. Just in the near future. So I'm not that interested in just jumping back into the market, the stock market at least. I think there's other more interesting markets we could be looking at, but I'm just keeping an eye on this and seeing if we're going to, potentially find a footing and, and be able to look at, what's going to happen in the near future. So I hope that all made sense. Let's look at the S&P. See what those markets are telling us, what the S&P is telling us. So we have a support zone around 1750 and all the way down to 1728 to 1750. So we have the same sort of scenario here. Let me delete this off, where we have a major support area down around 1750. And then if we look at I want to look at a couple of different methodologies. I'm looking at the traditional charts. I'm looking at seasonality. Let's also look at the momentum charts. And just to show you another perspective, for example, here's the S&P on the, this is a methodology that I've been talking about from time to time. Here's the Darvas squeeze, or the Darvas methodology on the daily chart of the S&P. You can see we fired a short signal around 1809 with a target of 1772. So when I'm looking at these kind of markets from a momentum perspective, they've basically gone momentum. But when I look at targets being hit using this methodology, those usually provide pretty decent support areas. So around 1770 in the S&P, if I correlate that with the S&P chart here on the traditional chart, so not to confuse the issue, but this is the same chart, but just looking at it with Darvas boxes and looking at this methodology where it fired a signal and it has a target of 1772. And then if I just extrapolate that, 1772 on the traditional chart is somewhere around 1772 is right around there, and we're coming into that area, and then we have a major support level around 1750. So all I'm saying is I think we're coming fairly close to a low. In order to determine that, though, we'll talk next week about looking at what I would use in order to determine if we've actually hit a low and we're going to reverse in the market. I would look at lower time frame. Actually, maybe I'll just cover off on that pretty quickly, not to confuse the issue too much. So let's look at another methodology, and let's look at the Ichimoku cloud charting. So if you look at, here's the Dow futures on the cloud charts, you can see we're coming right into the cloud, which is basically a major support area. So you can see we've got support on the cloud looking at this methodology between 15,800 all the way down to 15,400. But if we come into, let's say, this area, just trying to project the timeout, that would come in around 15,600. So you've got multiple methodologies that are showing that we could potentially be coming into some support areas on the Dow and the S&P. Okay, so if I just extrapolate a little bit more on the topic of, okay, well, what if we are coming into a support area? What are some of the things that I typically look for? So let me go back to the traditional chart. This is usually what my charts look like on a day-to-day basis. So this is multi-time frame analysis. Usually what I'm looking at here, I'm going to go back to the Dow. Okay, so here's the Dow futures. So this is what my charts look at. So here I've got a daily chart, and then here I've got a 60-minute chart, a 15-minute chart, and a 5-minute chart. So when I'm looking for swing trading sort of turning points, usually what I'm looking at are these are the 1 and 2. The daily chart and the 60-minute chart are the key charts that I look at. And then I just keep drilling, down into these lower time frames in order to try to find signs of, that the markets are ready to turn, and trying to, get more, resolution, or trying to get more magnification into, the market activity. So if you look at, here's the daily chart. That's usually what I focus on in these videos. Let me expand out the 60-minute chart. So typically what I'd be looking at, like, for example, I've got an alert set for this trend line here. I'm just going to extend this forward. If and when we actually break through this trend line on the 60-minute chart, let me just delete some of this stuff out. We're probably looking at, getting close to a trend change. So you can see here, this was the trend line, and then we've accelerated, sort of gone reverse parabolic down to the, to the downside. And you can see here, usually when this happens, we're starting to, this isn't really sustainable, this kind of action, whereas this 45-degree action is more sustainable. So I'm thinking we're getting close to a spike bottom. You can see a lot of volume came in here. This is usually sellers getting exhausted here, when you're in a down move, and you see a big spike in volume here, this area. The sellers may be either picking up or becoming exhausted. So essentially, when I'm looking at a turning point, usually what I'd be looking at is here's the daily chart, looking for momentum to bottom. I'd be looking for signs that momentum is getting, bottomy. It's starting to bottom here. And then I'd be looking at the 60-minute chart, and then I'd say, okay, well, let's look at the 60-minute chart. I want to see a change in market structure on the 60-minute chart, either denoted by, let's say we break through this trend line here, we come back and test it and hold it, or I'd be looking for a 1, 2, 3 trend change, which would look something like this, where we break through, we come down, we put in a lower high, and then we break through the high. So this would be like a 1, 2, 3 trend change, 1, 2, 3 trend change. And this would, this would give me the confidence that the market's found a bottom and that we're ready to go higher. The other thing that I'd be looking for is just, generally I'd like to see, if I start seeing this, where we put in lower high, lower high, lower high, and then we break through the trend line and we start to develop an uptrend, and even if we just hold this tight and then start moving higher, I'd be looking at this kind of structure. Essentially what you want to look at is just simple structure. Like right now we're in a downtrend and the market is putting in lower lows and it's putting in lower highs, right? Here's your lower high, here's your lower low, here's your lower high, here's your lower low. This should actually be in red. Let me just change this to red. Where you've got, there's your there's your lower low, there's your lower high, you've got a lower low here, right? That kind of structure, you've got a lower high here. So once that structure sort of reverses itself, I'm looking for, that, and I'm also looking for on the daily chart, I'm looking for a major support level close to where that, that might happen. So let's say if we start to put in a low here around this zone that I've anticipated, and then the market structure on the 60-minute chart changes, well, that's going to give me the confidence that maybe we're putting in a low. The other thing I'd be looking for is a potential double or triple bottom, where you do this sort of thing, and then you come down and you go a little bit lower, but maybe not a lot lower, and then you go higher, and then you don't, it looks like you put in a double bottom. Or a triple bottom where you have multiple tests and it doesn't, it just refuses to go any lower. That's another thing I'd be looking for. So basically, we've got our hypothesis going forward. We think we're getting into a major, support zone, but we really need for the lower time frame charts to confirm that from those perspectives. So I hope that makes sense. I didn't want to go into a huge dissertation here, but for those that are trying to learn about a little bit about technical analysis, and what to look for. I hope that's helpful. So let's let's just sort of whip through the other markets and see what what might make sense going forward. So let's take a look at the Nasdaq. Let me expand out the daily chart again. So you've got this sort of trend line, and then you've got this more sustainable trend line, which could take us all the way down to somewhere around this area. You've got a swing point high here, and then you've got a trend line here. This 33.98 area looks pretty decent to me as a support area. We still haven't reset momentum on the stochastics there, but we did have a bit of a divergence. You've got this price action going higher, momentum going lower here. So you've got that sort of a divergence, and now it's resolving itself to the downside. At some point it will reset, and that's what we're looking for. Let's look at the IWM, which tracks the Russell. So the Russell's into this intermediate trend line, and we have another, a stronger trend line down here, stronger trend line support, which would line up somewhere around 111, 110, 111. I think is a pretty key support level somewhere down there. So we'll be looking for that. Let's jump into some other markets. Let's look at the crude oil. So the crude oil, we liked this area here where we came into this low, and we thought that we might have a double bottom there. I was just talking about double bottoms. Technically, double bottoms, let me delete some of this stuff off. It's kind of confusing. Technically, double bottoms don't confirm until, if you want to be a purist, double bottoms don't really confirm until you break this sort of apex here. And then, once the price action comes above there, now you have a bona fide double bottom. Okay, but I'm always trying to anticipate that this might be a low. That's what we were doing, over the last several weeks. I actually, kind of put my money where my mouth was here, and I took a small trade in this area here, and I basically got out, I think, on this day. I think I got out on that day there. So I got out a little bit early, but it was a decent trade, right? We had a shifting of momentum back up to the high side off of a support level, and that trade's basically done. The reason why I'm not really interested in staying with it is because I don't really have the confidence at this point to really feel confident that we're really going to get above this psychological $100 a barrel, $101 a barrel. It's a psychological level, as one of my trading buddies mentioned the other day, and it's not only a psychological level, but it's a pretty darn strong, technical level as well. So if we get above, let's say, $100 to $101 a barrel, then I'm going to be looking at a test of $110 to $115 a barrel. So I think that's really where the opportunity at this point in time lies, is breaking through and confirming this double bottom here, and looking for an entry somewhere, where the market is, around here somewhere, where the market is going to confirm strength. So we need to be careful that we don't get back into this market if we do this, and then we kind of buy the high and then it fails. So we got to be really careful here, but that's sort of what I'm looking at going forward. Let's take a look at the natural gas. This was another market that I really liked. I did not unfortunately participate in this, but I was talking about in previous videos. Let me delete some of this stuff off. In previous videos, we were talking about this area here where we pulled into this trend line, and I like this area if we could break back above the high of this candle here, right? Because we were into the support level, and I felt like this candle here might establish some decent risk at the low, and if we broke above the high of that, that's exactly what we did. And then we got this humongous move all the way up, all the way from $4.10, let's call it, all the way up to $5.18. Intraday we even went higher, but we closed around $5.18. That was a humongous move. Unfortunately, I did not I did not participate in that, even though from an analysis standpoint, I've been talking about it in the video. I hope people realize I don't take trades on everything I analyze. This is more for, review purposes, but I do actively trade, but I don't trade everything I talk about. So, just, keep that in mind. Let's take a look at, so I really like that market. I think it's already made a major move now. I'd be looking for some sort of a pullback in that market. But as one of my trading friends has pointed out to me, if you look at the long-term charts and where the market was and where it's been, I mean, natural gas going back to $10 would just be a normal retracement of the long-term trend. So, this market, I think, has been basically precipitated. This move was precipitated by the unusual cold weather, if I'm not mistaken. But having said that, even on a technical basis, $10 is doable over the next several months. So let's take a look at another market that I was interested in. I think the last couple of weeks we were talking about the commodities. So I like crude oil. We've covered that. Like natural gas. We covered that. And I like gold. Although gold has been, it's been really kind of choppy. But, we're looking at this zone of 1272 to 1324. We came in and touched the bottom end of the zone around 1272. MACD starting to cross above the zero line. Stochastics are overbought. I think we have the potential to go higher here as long as we hold, these lows here. But it's not that much of a mover in terms of what it's been doing. Now, we could pick up here and spike into some of these levels, but this market is a little bit slower than I'd like, but I still think we have the potential to go a little bit higher, provided we hold those lows. So keeping an eye on that. Let's look at silver. See, silver just looks sideways to me. We could still tag that zone, that potential zone there. Let's take a look at copper. Copper's pulling into a support level here. Not that interesting, but this could be, this could represent an intermediate low. In order to determine that, what I'd be looking for would be a break above the high of that candle there. And snap. There we go. So if we, let's say, hold this support level and then price action closes above the high of this candle around $3.30, then I'd be looking for a short-term low in copper, looking to see if we could retest $3.41. That's kind of how I look at it. We seem to have a pretty strong resistance level around $3.41. So let's see what else. Let's look at a couple of currencies. Let's look at the dollar index. The dollar index is just flip-flopping back and forth. We were more bullish last week. Now we're more bearish because we're below 80.86. This is just a sideways market. Until and if it proves otherwise. But you can see like it wants to hold these lows around 79.28, and we're holding these lows around 80.21. So, we're just, the breakdance fight continues between that and the euro. Let's take a look at the euro. $1.38 is the major resistance in the euro. We were talking last week about, this market just sort of jumping levels. So we came into this level, 135.23. We're back into 136.83, and you can see it closed right around that level. So we're talking about these, once you're able to determine support resistance levels, and you can see that these lines have been on my chart for a long time, and we've been talking about we're probably just going to bounce around between the levels. The question is, which levels are we going to bounce between? And that's all, that's all the market's doing, is just looking at these key levels and looking to transact business and to find, some sort of liquidity and, at or around these levels. So there's no real conviction in these markets. I know that Europe's having some problems right now, but, the rest of the world is too. So we're just, kind of bouncing back and forth. Let's look at, I'm going to look at the British pound. I like the British pound just because it's in a pretty steady uptrend here. I'm going to start looking at these currencies a little bit more and looking to trade maybe the FX series. So the FXB trades, it's an ETF. It's an ETF that trades like a stock, as all ETFs do. and it is also optionable. You know, you can trade options. Excuse me, you can trade options on it. So this is something I'm going to be looking at going forward a little bit more, to look for some other trading opportunities, because, you know, when let's say if stocks aren't doing well, but I don't want to get short, maybe there's some currencies that, you know, that can be participated in without necessarily having to trade, you know, the Forex or the futures market. You know, you can trade them just like you trade a stock. So that's something I'm looking at. Let's look at the USD CAD. The USD CAD hit that $110 level, closed right around there, went as high as almost 112. I don't really know where this market can go, but I like what I'm seeing, so I'm going to keep an eye on it. I guess I could delete, you know, some of these targets here. We do have this projection here. If I put on the 2618 projection to see where that might take us, that takes us all the way up to 117. So if we can hold, you know, some of these levels, you know, 117 might be in play over the long term. I don't know. I've heard some people talk about 120, you know, USD versus the CAD. So let's actually look at the CAD. If we look at the Canadian dollar in the futures market, it's in a pretty steady downtrend. It's looking like it's trying to bottom here, short-term bottom. We might get a bounce back into support and then look to see if maybe we're going to roll over. But as long as the Canadian dollar remains below, I would say, this trend line here, I'm still net negative on the Canadian dollar. So, you know, we're starting to accelerate the downtrend here. There's really no signs, except for maybe a short-term bounce, that, you know, this trend is going to continue anytime soon, until and if that happens. So let's look at, Trading Friend pointed out the Japanese yen. Looks interesting. The Japanese yen does look interesting here. It's starting to put in lower highs, higher highs, and higher lows, you know, from a market structure perspective. So this is starting to look interesting to me. I'm going to be watching this more going forward for trading opportunities. And I think if you want to trade this like a stock, you can look at the FX. Is it the FXY? I believe it's the FXY, which are basically the currency shares Japanese yen. And you can see here it doesn't, you know, there's a lot of gaps in here because the futures track the 24-hour action, overnight action, whereas the currencies only trade the cash session. So if it trades higher overnight like it did here, and then when it opens during the cash session, it'll just show, you know, this kind of a gappy chart. Hope that makes sense. Let's take a look. Let's wrap this video up. I'm sure we're going too long here. Let's wrap this video up and look at some bonds. Here's the 10-year bonds going higher. It came into this Fibonacci resistance level, came off a little bit. Don't really have a lot to talk about there, except that it is, you know, going higher and it tested resistance. The 30 years going higher, which means interest rates are basically coming back down. So let's look at TNX.X, which is the 10-year yield. We did find major resistance at 3%, and we're coming off of that. So where might we find a support level? A support level might come in at a key fib level around, you know, we're right in that zone between the 50 and the 618. So I'm looking to see if we might find support here and move higher, if we're going to come back down and retest those lows. So for the time being, the major takeaway from this is it looks like interest rates are going to remain low, and the bonds are, you know, going to go a little bit higher. So I hope that makes sense. And are there any markets that we haven't looked at that we should look at? I don't believe so. So let's wrap up this video. Stay tuned for an upcoming CSTA Oakville chapter meeting, where we're going to be recapping considerations for trading and investing plan development. That'll be on the second Wednesday of February. So until then, good trading, good investing, stay safe in the markets, stay warm. It's been freezing cold out there. I can't believe how cold it's been this year, but stay warm, and we'll look forward to seeing you soon. So all the best, good trading and investing, and take care for now. Bye.